Just a couple of seconds ago, we were all listening to Mo Arian there from Allianz saying that, look, we've got growth, we've got earnings, we've got buybacks, but the market hasn't gone anywhere in the sense that, look, when you factor in the losses in February, we're basically at break even. Why is that?
You know, the market's a discounting mechanism. It looks out 6 to 9 months into the future, and I think the market is really telling you that it's concerned. It's concerned about the Federal Reserve. It's concerned about, you know, the tax situation. It's not going to be, you know, forever for the general American public. And so I think it's sending a signal. It's worried that, you know, the Fed may become too aggressive. 3 rate hikes this year, 3 rate hikes next year. You're talking close to 4% by sometime the end of next year. And so I think it's telling you that, you know, earnings are great right now, and I think all of last year was getting us to this sort of Goldilocks environment. But what happens in, you know, 9 months from now? We look out maybe a year from now into the first quarter of next year, what are things going to be doing? Are we going to see a slowdown? Are we going to still have the buybacks? You know, is Trump going to initiate a trade war? I think that's what it's trying to tell you, and I think that's why the market hasn't really done anything. Now, if you take a look at where the market's trading at 17 times. It's really not that expensive. So Alarian is right on.
Okay, so Bob, here's the thing. I mean, you could also make an argument for basically more difficult comps, right? So good news is bad news if you look 9, 12 months down the road. I understand that. At the same time, though, how much do you think this market is discounting, if that's what the market does, and it does, a U.S.-China trade war? I mean, round 2 of the talks kick off in Washington later this week.
Well, I think the thing that Trump did today, trying to help VG, you know, trying to get back into, you know, the tech business in the U.S., involved with that, was a step in the right direction. Remember, Trump is a hard-nosed negotiator. He's used to dealing with things like union bosses in New York City. So he starts off asking for the sky, and then he works his way down. He realizes, like, if you're selling a used car, you start off high, and then you work your way down to the level that in which you want to get the price for it. And so I think the market's really sort of still coming to terms with that. They hear this outrageous request that Trump is making, and they panic because the world isn't really used to that kind of negotiation tactic, especially from the President of the United States. So I think it's going to become more evident. I think people are going to start to feel a little bit more comfortable. You know, we're into the second year here. I mean, you know, I think as we sort of move forward, I think the market's going to, you know, if they see some movement on trade, and they don't see a trade war developing, Trump is not a moron. He may act like one sometimes, but he's not. I think he gets the deal done. I think, you know, you'll see some concessions on both sides, and they move forward with that, and the market starts to feel better.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.